All right, party people, what's up? We are live. Happy Friday. Happy 4th of July, America. You know what? I haven't got set up yet. This is my second stream on StreamYard. I don't have my buttons set up yet. So I am working on that. I've got something in the works. Hopefully that'll be coming soon. Today, we talk about that's kind of the main question that most buyers are asking themselves right now. Like, if I buy a house, am I better off being like house poor, or am I better off renting? And I'm going to explore that question with you just from my own experience. And then we're going to look at several different things today. We'll look at the happy recession, I guess. What do you say for that? Sad recession? I don't know. It's the recession started today officially, and I'll show you some data on that, and kind of what's going on in a recessionary environment, which is a very unique recession environment that we're in right now. With so many things piled up against us, you would think that things would be so much worse, but they aren't. And mortgage rates holding up really nicely. We'll talk about that as well. Today was also a huge day in the credit world where nearly all medical collections were deleted. 70% of medical collections were deleted from credit reports. So people out there with medical collections, re-pull your credit. You are looking way better today than you were yesterday. So let's dive into this question just right off the bat. Is it better to be house poor or to be a renter? Well, the renting definitely has its place, right? Everyone has been a renter at some point, whether you were incapable of buying or whether you were in a situation where you needed to figure something out. You know, sometimes you move to a new city, you want to figure out, hey, where do I want to live? So I'll rent for a year. There's some people who will not rent. I know they move here and they're like, I will not rent. I will not pay someone else's mortgage. For those people, this video is not for you. You have your own strategy. You're refusing to rent. So be it. And a lot of times those people are people who do very well with themselves because real estate does tend to go up over time. So if you are in a situation where you're renting, when is it okay? It's okay. It's always okay as long as you have a homeownership strategy. You have to have a real estate strategy, aka a retirement strategy. If your retirement strategy is trying to save a bunch of money in the stock market, that might or might not work out. Who knows? But if you own a home free and clear at the end of the day, you're going to be okay. Right? We know that. Like, if you own a home free and clear, your options for retirement and financial security are looking good. So really, that's the main thing that you need to do for your retirement, is to have a paid off home. So if you don't have a strategy in place, if you're just renting because it's convenient, because it's easier, or because you don't think you qualify or something like that, get educated on that. Because what ends up happening, I'll tell you exactly what happens. I wish I had my buttons right now. What ends up happening is, it's fast forward 6 years later, all of a sudden you wake up and go, oh shit, are we going to keep doing this? Or, the lease is up again. We just keep renewing. I've talked to a lot of people. I've talked to people who've rented for 22 years, 11 years, 7 years. And like, yeah, it just flew by. We don't even know what happened. We should have bought a few years. We got back. So just make sure that doesn't happen to you. If you're like, hey, I can't afford to buy right now, I don't have enough saved up. Okay, go ahead and rent, but make sure you're renting within your means so that you can actually save money to change that one day. You don't want to be a lifelong renter. That's not going to work out well. So if you are renting, make sure you're renting well within your means. Make it uncomfortable. Rent something that's uncomfortable for you. Don't rent your dream house, because then you'll get stuck there. You may not be able to buy your dream house, but you may be able to rent it from some landlord who's had it paid off for 20 years and will rent it to you for a good deal. But that's not a winning strategy long term. That's a guaranteed losing strategy. So when we look at the difference between the two, don't assume that renting is abstaining. Do not assume that by renting you're kicking the can down the road. You're just pushing it to the right. You're not. You're making a decision. You're shorting real estate, essentially. You're betting against it, but at a guaranteed loss. There's no upside, because you're for sure going to lose the amount you're paying in rent. You're just betting that the amount you're going to lose paying rent is going to be less than the amount you would lose by owning a home. So you're betting that owning a home is going to be a bad thing, a really bad thing, and you're taking the less of the two evils. And that has not worked out very well over the entire history of mankind. Real estate has always gone up in value over long periods of time. Sure, there's blips here and there, but it's always gone up over time. So you have to have a real estate strategy in place. You have to have a plan. Even if your plan is, okay, we're going to save money for now. We need to save up this much. I figured it out. I know what our credit scores are. I know how much we need to save. We can't get a gift from family, which, by the way, is one option for a lot of people who think they can't buy. They have the income. They don't have the down payment. You can borrow the money, you could borrow the money, or you could get a gift for just about any loan program. You can get a gift, and it's fine. Even we're doing a non-QM bank statement loan right now, and the guy's getting the down payment as a gift. I mean, you can get a gift for just about every single loan program. So this is why talking to a loan professional is a good idea. If you are a renter and you're like, I don't want to rent. I don't like the fact that I'm paying this guy's mortgage, but I don't really know what else to do. Get educated. Watch videos like this. Contact someone like myself. Talk about it. Submit an application. See what happens. Maybe you get approved, but you're only approved for $250,000. Not going to get you anything in San Diego. How do I improve that? This is how you can create a plan. Once I know why I'm only approved for $250,000, well, it's because your income and your debts, and here's how it looks. So how do I make that better? There's two ways to make it better. You can make it better by getting an increased income, right? Or you can make it better by decreasing your debts. And those are really the main two ways. Also, increasing down payment is another way to do it. So know where you stand, get some sort of idea of where am I right now, and then figure out a plan to get to where you want to go. That's all you really need to do. So if you're renting and you have a plan, or you're working towards a plan, that's good. If you're renting and you're going, I'll make a plan one day. Or you know what? Why even think about it? We've got this house. Everything works perfectly for us right now. Why would we want to change that? Life is busy. We've got this going on. We've got that going on. We'll just keep paying the rent. And you get stuck in that, and you'll just wake up 10 years later. I'm telling you, this happens all the time. People call me and they're like, I can't believe it's been 11 years. I say, how long have you been learning? I always ask, how long have you been renting? 11 years. Gosh, I don't know. I guess since 2011. Wow, that's 11 years. They don't even know. They're like, wow, it has been 11 years. Shit. So don't let that happen to you. Don't unconsciously, pay for someone else's mortgage for a decade. Okay. Have a plan, at least to own a home at some point. And some people may say, well, I'm going to be in San Diego for a couple of years, then I'm going to go back, to where I came from. I'm going to go back to where I'm from. Okay. So you're going to buy your forever home there. Cool. What are you going to do in the meantime to prepare yourself so that can happen for you? That's totally okay, but have to have a plan. So is it better to be house poor, or is it better to rent? I would ask people that who are house poor and see what they think. Because anyone who is house poor, now it also depends. Like if you bought a home when rates were, 2.5% or 2.25%, and you're house poor at that time, then you would look at it today and you go, well, I have a huge amount of equity, and I'm really glad I bought, because I wouldn't be able to buy at today's prices and today's rates. I wouldn't have been able to, right? Now, if you are going to be cash poor buying a home today, rates have gone up. So the cost to own a home has gone up, because prices haven't really moved a lot. A few people have gotten some deals here and there, but prices haven't moved a ton overall. And we still need some time for that to flush out. But if you're in that situation today going, well, should I buy today? I'll be house poor. You have a little reprieve potentially coming to you. See, if you had bought and you were house poor with rates were at 2.25, there's no reprieve on the way. That's as good as it's going to get. But if you're buying with rates are 4.5% or 5%, or if you're conventional, maybe they're high 5s or 6%, then there's a really good chance that rates will drop. And I'm going to go over rates today. We're going to look at what's happening with mortgage bonds, and the strength I've been telling you about is there, and it's showing up on the chart. There's a really, really good chance the next year or two, maybe even sooner, rates will drop and you'll be able to refinance and get a lower rate. That's not happening for people who bought when they were house poor at 2.25. Now, they still made the right move though, right? Look at all the equity they have. They got the great interest rate, the great payment, the lower price. They did it right. But now the same person who's watched their friends do that, who's still renting, going, damn it, we should have bought back when they did. What do I do? And that's where you have to make a decision. Do you know where you want to live? Do you know what neighborhood you'd like to be in? Do you know what area you'd like to be in for the long haul? That's really where you should buy property. And if you say, well, we'll be here for 5 years and then we'll go back here over there. Well, then you have to ask yourself, do you want to own an investment property here? Do you want to own an Airbnb here? You buy a home here, live in it for 5 years, turn it into an Airbnb or whatever, or a long-term rental. Do you want to have a home that you can come back to? So just have to look at those very basic things and decide what makes sense for me. Most people who live in San Diego, they don't want to go anywhere. Why would you? Unless you had to, or you had family issues or some things that were pulling you in a different direction. So a lot of people who buy here, especially in the military, they're buying here. They'll only be here for 3 years, and they know that they'll eventually either turn it into a rental, or if they're up a big amount, they might sell it and take that money to the bank. And why not? So it's always better to own if you can, but you have to have a strategy, because you don't want to own just for the short term if you're expecting long-term gains. If you're expecting the safety of real estate to be on your favor, you need to own for the long haul, not for the short term. So if you're going to own for the short term, you need to know a lot more about the schematics of the market. If you're going to own for the long term, you just need to get in as soon as you can to the area that you want to be into, the home that you can really sink your teeth into and be in for a long period of time. Hopefully that answers your question. All right, that's the big question that's going on. Let's look at some stuff here. Oh, we got some things today, fam. Oh, wow, we got some things today. Okay, so the recession started today. P.S. Now, in my post, it's really interesting because I put in my post today on Facebook that they won't want to mention this. And you see that here, no one is saying that the recession has started today, because the numbers aren't official, and they won't be for a little while. And they're not going to say anything about it until, of course, they have to. People have been just dicing me up, like, who's they? Why do you keep saying they? Well, obviously, politicians, people who, the recession makes it look bad, they're not going to want to admit it. So Atlanta Fed GDP tracker shows the U.S. economy is likely in a recession starting today. So this GPN gauge is estimating the second quarter is at a negative 2.1%. We know the first quarter was at a negative 1.6%. So not only declining, but an increase. And that's not a good look. That is not a good look. And if that's correct, it would explain some of the real ugliness we've seen in the market. So the question is, forecasting into the future, how does this look? From a business standpoint, how does the overall economy look? We're going to take a look at a couple of different things there on that front. But I love this. Look at this J pal. That is so him right there. So we're in a recession. Technically, you need 2 negative quarters of GDP. That starts today. So what's going on? That's what we're going to be looking at. There is a ton. So the supply chain issues have not gone away. In fact, they've continued to get worse. There's a ton of goods. In fact, we tried to go buy a new couch just because we were like, okay, the couch we have was just sort of makeshift. We have one that's really, really old too. We love it, but it's really old. And so we're trying to move things around. We went in, they told us it was going to be 8 weeks, but they couldn't guarantee, like, we couldn't just order it and then get it 8 weeks from now. It's like, no, you have to wait until it shows up here on the website and then order it. And then it'll be 8 weeks. And so there's a massive pileup of cars, furniture, big ticket items that all come from overseas that are stuck in ports all over the place, not just in European ports, but all over the place. Just stuff just stuck. And so the supply chain issues. Now imagine this. Imagine going into a recession where we've already seen, mortgage rates have been up all year. So 6 months of increased mortgage rates. Mortgage rates have almost doubled. And we've been experiencing that since the beginning of the year. So that's already baked into the cake to some extent. A small increase in inventory in real estate across the nation. Some areas have spiked a little bit harder, but in San Diego, we're still like at 2020 levels, prior to COVID levels, where inventory was really low. So we haven't seen anything crazy there. We got record household wealth just a couple of months ago for that metric. So we have record household wealth. We also have supply chain issues and huge inflation. You would think with all of those things that things would be terrible, but they're really not. I mean, if we could start getting goods in, things can flow. That would be really helpful, wouldn't it? It'd be helpful for everything. And so, there's still things. And the reason I bring up these things that are bad that we already know of, inflation. We already know of high interest rates. We already know of all that. So those are all known bad things that could get better. And so markets tend to turn around once all the bad things that are going to happen are already on the table. See, it's the brand new appearance of bad things happening, especially things that are unexpected, that really causes markets to go down. Hey, here's some new thing. that's bad. Boom. Oh gosh, everyone wants to get out. But once all those bad things are on the table and everybody can look at them and see them and go, oh, okay, higher mortgage rates, inflation, supply chain issues, this, that, the other thing, negative GDP, layoffs here and there. These things are all on the table. Bitcoin crushed, crypto's murdered, stock market down 30%. All these things are on the table already. So it just decreases the likelihood that there's going to be more new bad stuff coming. It doesn't mean that it can't happen, but once there's so much stuff already there, that's usually when people go, oh, well, there's all these bad things that certainly can have a bad effect. No, that's already priced in. Like all those things are already priced into this market. So how much worse can it get is kind of my question. We're going to find out. Today's also a huge day. I want to make sure I mention this as soon as possible. This is a massive, massive win. So some people still know me as Mr. Credit, and I had a credit repair company over a decade ago. We really tried to help people fix their credit the right way. And one of the biggest things is medical collections, where people will get, you'll forget to pay a copay or something, they'll bill you for $20 and they slap a collection on your credit report, which crushes your credit score. And even though it's $20, $5 I've seen medical collections for. And instead of doing like one collection for $1,000, they'll hit you with 12 for like one's for $187, one's for $62. So this has finally come through. I'm not going to give you the history of this, but basically, as a result of recent legislation and pressure essentially on the credit bureaus, 70% of medical collection debt will be removed. Today's the day. This article says soon be removed because July 1st is the day. And I think it even says so very early in this article. No, okay, maybe it doesn't say it in here. This article is from like April, but it tells you what's going on. And so medical collection debt will be removed if there's a zero balance. That's very, very helpful because just the presence of a collection on your credit can hurt you 50, 60, 80 points. Just the presence, even if it's paid off, even if it's really old, it can really, really hurt. So 70% of these are going to be removed. So if you have a zero balance, going to be removed. How cool is that? Also, if you have a new medical collection come, then the collectors have to give you a year to pay it before they report it to your credit. So they have to give you a year to pay it off. Now, I'm going to tell you right now, tell everyone you know, if they get a medical collection letter, to just pay it. Dispute it afterwards. If you think it's BS, if you hate it, if it's wrong, pay it and dispute it later. Put on the check in dispute, but pay it so that it doesn't end up on your credit report. This is amazing for people who've tried to buy, people who have medical collections, people who have really low credit scores. A lot of times they have medical collections. Today's the day they should recheck their credit report. All right. And if you want to recheck your credit, let me see if this works. Nice. You want to recheck your credit. You can do that if you're trying to buy a home, you can do that through a mortgage pool. I can help you with that. Shoot me an email, give me a call, text, pull your credit, see where it stands. There's no cost to do it. And when you pull your credit for a mortgage, there is no ding to your credit. We've gone over that many times. They changed the algorithms on that in like 2018, 2019. So no ding for doing a mortgage pull. Anytime you can shop for a mortgage without any concern about it hurting your credit score. So that's something to do right there. All right. Let's keep going here. So this one is so true. And the article's okay, but this fact is really true. A lot of people are taking their sweet time. I'm still talking to a lot of people every day who want to buy homes, but everyone's just going very slowly. So this mortgage demand stalls is true. And it's also true as interest rates swing briefly lower. I love how they say briefly. They're always so negative about it. Interest rates have swung lower, and it's not been brief. It's been going on for quite some time. And I'll show you here. Let's take a look at the chart. So this is mortgage bonds. Determine interest rates, right? When these are going down like this, that means mortgage rates are going up. And when they're going up like that, that means mortgage rates are going down. Okay. So we want to see these go up. And you can see here, we've had a little, just kind of seesaw action. But we had this big break today. Huge gap, actually. Big gap. Gap up. Went up, hit resistance, got kicked back. That's okay. Now this former support area, which became resistance, is now flipping back over to support. That's very, very bullish for interest rates. And I'm stoked for so many reasons, not just because I called it. I don't take that many victory laps on here, do I? Man, I wish I had my buttons right now. But I've been telling you, the formation here looks good for us to see lower rates. Now imagine what would happen there if rates somehow snuck back into the threes for FHA-VA, or even just right around 4. That's not far away. That's not far away right here. We're now looking, VAs are in the mid to high 4s, depending on credit score. I even saw one today that was a conforming balance, so not a high balance, a conforming balance with really good credit. It was 4.375. So we are not that far away. Can you imagine if we crept back into the threes, what would happen? This would the bull would rage again, especially in real estate. There's a lot of people on the sidelines. So I'm expecting now today, we're going into a 3-day holiday weekend. Lenders haven't really priced this in just yet. It's still a lot of hedging going on. There's still concern, with what might happen in the markets, of course. Day one of a recession, understandable. But, if we get around to Tuesday and things are still stable, I think you'll see a lot of lenders dropping rates. So I think next week could be a great week to lock, especially if we go up here and we create a new range and level up and stabilize here just a little bit. Boy, that's going to be sweet. Those are going to be sweet days. That's when actually some of these people refis start to make sense again for a lot of people. If you get into that 4 or even into the 3s, there's going to be a lot more refi opportunities. So that's something that's totally possible, by the way. It's right there. We're on the cusp of it. Because if this holds, and it's looking like it will today, it did hold today. We're market closed now. It held. So that held the support nicely. We actually finished today right there. So it doesn't mean that it couldn't just gap down and tank on Tuesday. That's always possible. We always have to understand that markets can go either way. But as of right now, technically, the way it looks, now we've got that as support and we've got this move. Finally, we finally have a moving average for support. What is that, the 25? The 25-day moving average is now beneath where mortgage bonds are trading. Hallelujah. We've been underneath the moving averages. They've been resistance for so long. We're finally above. How about that? And then, so this is obviously like an ad, and they've been doing tons of these like advertorials on CNBC, which they always do. Today's mortgage rates are still relatively low. Here's why you may want to apply for one sooner than later. They have some interesting logic in here. I just thought this is a good read. You have to just kind of dodge all the ads in here. This is definitely an advertorial situation. They're giving you the history of mortgage rates and the context of everything, basically everything I've said. But if you don't want to take my word for it, here's another way you can look at it and see. This, though, you can't underestimate how big this is, especially in a real estate market now where FHA buyers are getting offers accepted. VA buyers are getting offers accepted, getting closing costs paid for. Down payment assistance buyers are back at the table. They have options to buy. They're getting offers accepted right now. Now imagine if you have a whole bunch of people who've been locked out. A lot of these people make good money. They just have bad credit. Now those people today, if we can just make them aware of it, if nothing else, go get this link, which I'm going to post in the description on YouTube. Get this link and go send it to everyone that you know. Make sure people are aware of this. One thing that they don't do, and you have to appreciate it when lawmakers do something that's right, but the one thing that they don't do is they don't market anything. So they may go and make a rule, hey, we did this and we righted this wrong, but they don't tell anyone. There's no marketing department to get the word out. So we have to do that. We have to be the marketing department to let people know that, hey, if you have medical collections, if you have been screwed by the system, and some of these people will be the people I talked about earlier who've been renting for 20 years because they couldn't get a loan because they had medical collections. And they have medical bills piling up left and right for this and that, or they have long-term disability illnesses and things like that. We need to let them know that that ship has been righted and they now have an opportunity. There's those buyers, the FHA, the VA, the DPA buyers. There's a whole bunch of people underneath this market just wanting to get in. And, the window's open. I don't know how long it'll be open because obviously if rates do drop, like kind of look like they might drop. Might drop a bunch. What if rates drop 0.5% next week? Does everyone realize that is totally possible? Dare I say I'm not going to say probable, but dang, it's possible. Let's just say it's possible. I'll leave the adjectives out. It's possible. So then what? Then where are we at? How's everybody feeling then? You're going to be feeling pretty good at that point? The market could totally change just like that. Also, remember this. And we were talking about all the things that have piled up, recession, stock market's down, everything that's on the table. Also, keep this in mind. Seasonally, in San Diego, I'm not speaking for real estate markets across the country on this, but in San Diego, seasonally, this is the slow time right now. So not only do we have all these things going on, we also have seasonally like the slowest time. I remember the last 2 years have been absolute boom town. And even the last 2 years, whenever there's like a week where things are slow in my business, you always feel like you're doing something wrong. Like, did I do something wrong? Why is no one calling me? What's happening? um, and each time that that's happened in the last 2 years was during this time of year. It's in June, July. A lot of people taking vacations. We have holiday weekends. We have kids out of school, parents trying to figure out what to do. That's all happening right now too. So that's also amongst all of these different things. We also have seasonal slow time. So that all adds up to, man, there's lots of possible good news here. There's lots of possible upside opportunities. I see things not being as bad. Some people think, they go dark and they go, hey, what about this, and this? All worst case scenarios. Yeah, the worst case scenario is always really bad. The worst case scenario is nuclear war and we all die, right? Or whatever. But let's be reasonable. Be reasonable about your expectations. Don't make decisions based on things that are improbable. So too many people are going to the farthest edge of the fear grid, and that is where they're hanging their hat for their actions. Don't do that. Don't go all the way to the far end of the fear grid and make your decisions based on that, because you're going to be wrong so often. Look at what's in front of you. Don't buy into the BS. What is actually happening? And we can see that here. Yes, crypto has been slaughtered. Ugly, ugly, ugly stuff. I'm down so much. So much. Oh my God, it hurts to talk about. But am I doing anything different? No, I'm not. I'm sticking to the plan. I have a plan. It's a multi-year plan. I'm sticking to it. Don't let these people, don't let the market makers control your thoughts. You look at the facts for yourself. You make decisions. What's best for your business? What's best for your family? Act accordingly to that. Okay. So these links will all be posted below. Stay bullish. Happy America Day. My favorite holiday. Must do on July 4th every year. Watch The Patriot. Watch The Patriot. If you are a patriot, you'll watch The Patriot on July 4th every year. And of course, if you need me for anything, I'll actually be around working this weekend. We're not doing much. We're hanging out. Our kids are so young that they literally, my daughter's playing. She's out of town playing in Junior Olympics for volleyball. The two younger ones, they're going to be in bed before fireworks go off. We're going to be hanging out. So if you need me, give me a shout, call, text, email. If you want to buy, if you want to refi, if you want to quote, easy stuff. I'll be here for you. You guys, you savages, have an amazing weekend. A happy 4th of July. Celebrate this country, celebrate the flag, celebrate our freedoms. Let's make sure we keep them. And I will be here if you need me. Have a great day. Happy Friday. We'll see you soon.